Hello fellow traders, it's Rafał Zuchowicz and welcome to my channel. In this video I will discuss with you a very profitable yet forbidden and illegal strategy. You can still do it, but remember that it's against the broker's rules. They don't want you to do that because you would get rich too quickly. I'm inspired by one of the comments made by one of the subscribers who said, "Hi Rafał, I know someone using two accounts for trading, and yes, the strategy is based on two separate accounts, and he always takes small profits without losing, but don't tell anyone how he do this thing. Can you help us with that? I think it should be with two accounts. He don't tell anyone how he do that." So now that's why you have me here. I will tell you most likely how he do that. There might be a different strategy because the strategy that I will tell you about is not about small profits, it's about big profits. So that's a little bit different. Okay, two accounts. You need to have two accounts. Rule number one. Rule number two, they both need to be on a massive leverage. Rule number three, they both need to be in separate brokers, otherwise you would be caught. Rule number four, you need a very quickly moving market. So you need some news. The strategy is clearly for the very volatile markets that will make a decision and it will go in one chosen direction within 1 minute, let's say. So the news is the perfect moment. How do you do that? Here is the thing. We are on British pound to Japanese yen. This is a 5-minute chart. You can see that's 8 o'clock. If you look at the bottom, 8 o'clock in the morning, there are some news on the market and the market is reacting to the news. It's reacting and going over in one move. It's going over 100 pips. If we continue this move further on, we can see that this move is at the end of a day, 4 hours. You've got already 170 pips and later 200 pips. So imagine you can make 200 pips, but how do you know which way the market will go? Here is the thing. With two accounts, you don't need to know that. So you might be thinking like, okay, so what? You open one buy, one sell, so later here are you winning, there you selling, so you are on zero minus the spread, so you're basically losing. Not if you are clever about it, not if you use the high leverage account. Let's jump into the leverage talking. Let's say your account is $100, that you are willing to sacrifice $100 for this strategy. Let's say your currency is a it's a USD, so American dollar, and the currency pair, as on the previous example, is British pound to Japanese yen. So with leverage of 1 to 500, this is the margin calculator, on $100, you can open 41,000 in units. So that means 0.41 lot. And now let's have a look. If we go to the pip calculator, how much is worth one pip when we are trading on 41,000? So 0.41. And one pip is exactly £3. $3, I'm sorry. So what does it mean? Let's go back to our previous charts. And let's remember, £3 per pip. And we traded at this point at 8 o'clock. There was a news, and we open an account, two trades, one going buy, one going sell. So after 33 pips at this point, 3 times 33, it's $100. We are out of the buy trade. The buy trade, our margin is exhausted. We don't have any more money. The broker is closing our account completely, closing the trade. You don't have a trade anymore. But the other one at this point is $100 in profit and growing. And because this is the news, you are not closing after 33 pips. You are waiting because you know that this news is making new sentiment on the chart. So the movement, the continuation of the movement will be in hours, maybe even in days, depends of what kind of movement we are talking about. I mean, what kind of news we're talking about. So in this place here, after 100 pips, so this is basically 2, 4, 6, 7, 35 minutes. After 35 minutes, you have already $300 minus 100 that you on the other account, minus $100 that you put on the other account. So you've got 200 in profits. Should you decide to wait longer, you remember later on it was 200. You would have times 3, $600. Lost 100, profit $600. So let's recap. $200, 100 in one account, 100 another account. Maximum leverage that you can get, 33 pips, that's enough for the move. And then bang, you are making quick money. With this case, quick money. You can even wait for the pullback like here and then reinvest it again. Reinvest your profits and see what will happen. If the movement will be going for longer, you could make even more money that way. So yeah, it's illegal because, as I said, the brokers don't like it. They give you the leverage, but they don't want you to use this leverage in this clever way. They just want you to, blow your account, hopefully trading 1 to 500. But if you do it right, if you use this leverage in a right way, then this is what it is. I think, referring to the comments, that your friends, he might be using either this strategy or there are another strategies as well for like differences between two similar currency pairs like Swiss franc with euro, and you can do some tricks over there as well on two different accounts and make small profits. So each time you are taking small profits and you are building, it's quite consistent. It's maybe less risky because in this strategy you could lose as well, in the one that we discussed as well, because imagine that there is a high volatility. So for example, we have something that first the market makes a move of 33 pips, you acted too quickly, something went wrong, there was an initial reaction, 33 pips, it closes your account, then it goes another way, so triggers another trade and blows the second one as well, and then comes back in this direction, in the right direction. So first it would go the right direction, then it will go, so it will close the buy. The buy would be closed at this point. Later it will go again up. It will close the sell, or opposite. At the beginning it can go up, close the sell, and then the buy would be in profit, but then it will retrace and it will go lower, close the buy, and you will have both trades closed. So remember, you need to know what you are doing. Plus, I'm not advising you really to do that. And this is just to answer the question, this comment, and just to talk. It's always interesting, you know, all these strategies. It's like in casino, you know, there's like a little percentage, and if you take proper advantage of it, you can make money. Especially that I don't really think that it should be so illegal if you are using two different brokers at the same time, because if you think about that, you have 50-50. Your chances of the market going up or down is a toss of a coin. It's 50-50. So that means that one time this broker A will win, another time broker B will win, because there's no reason for you always to win with one broker. You don't know which one will win. So the brokers at the end of the day, they would have money from the spread from your activities. So it shouldn't be legal. It should be illegal if you are using the same broker. So that's what they actually mean. So for example, me and you, we make a deal that I will put 100, you will put 100. We both open in the same broker, the same trade. I mean, opposite trades at the same time, and then whoever wins, we split the profits. Then the broker is losing money. It's like disadvantages for him. So that's why it's illegal. But in the other way, in my opinion, nothing wrong with that. Okay, if you like this video, please watch one of these videos. I'm sure you will like it. Subscribe to this channel, thumbs up, leave me the comment. I love your comments, guys. Even if it's a short one, it always makes me happy. So leave the comment, and until the next time, take care. Bye.